strategies that in certain scenarios stand in direct opposition to one another. The principles needed to invest effectively in domestic mid-cap growth stocks do not perfectly replicate those needed to win with international small-cap turnaround stocks of the sort that Motley Fool star investor Bill Mann has uncovered for years. Don't let these contradictions throw you. The more you invest, the more you'll come to realize just how many roads there are to prosperity for disciplined investors. As students of the great masters, from Ben Franklin and Ben Graham to Warren Buffett and Peter Lynch, we're committed to teaching the timeless principles of successful investing using plain language. We want you to enjoy every bit of this audiobook and to leave it equipped to lay a permanent foundation for your financial independence. It is through the habit of continual saving, the discipline of regular investment, the deployment of fifth-grade mathematics, the use of a collection of superior investment strategies, and the power of your imagination that you will meet with enduring success. What you will find in this book is the unveiling of the core strategies that have led our newsletter services to beat the market substantially. The ambitious aim of this work is to assemble these competing investment approaches into a single strategy that will help you take your portfolio to $1 million and beyond. Here's a quick peek at the performance of some of our investing newsletters. Stock Advisor, 53% total returns versus 11% for the S&P 500. Hidden Gems, 24% total returns versus 2% for the S&P 500. Income Investors, 16% total returns versus 9% for the S&P 500. And Rule Breakers, 11% total returns versus negative 1% for the S&P 500. As you read, remember that the greatest investors in history are multifaceted. They're like the brilliant performer Frank Miles, who at our company's annual meeting in 2008 juggled knives, torches, bowling balls, and stun guns before twirling by on a unicycle. If they were baseball hitters, the world's greatest investors would draw walks, spray the ball to all fields, hit for power, and bunt. If they were composers, they could play all 4 families of musical instruments in the symphony. You see, the true master investor could never be categorized solely as a growth or value or income or even a domestic investor, because the truly great investor can do it all. So too, we believe, can you. Since the creation of the Motley Fool in 1993, our greatest pleasures have come when we recognize that our work is an adventure into the things we cannot yet see. No one knows what's next. We can merely calculate the probabilities. And so the art and the mysteries of commerce and investing richly reward the adventuring spirit and the prepared mind. One meeting in New York with the CEO of Coach has changed the fate of the Motley Fool. We hope this book will change yours. A note on the financial collapse of 2008. October. This is one of the peculiarly dangerous months to speculate in stocks. The other are July, January, September, April, November, May, March, June, December, August, and February. Mark Twain. On September 29, 2008, the S&P 500 cratered 9%, the worst single day for the broad market index since the crash of 1987. And yet that was merely one in a series of steep declines in 2008 that wiped out more than 5 years of market gains. In fact, at its low, the S&P 500 touched prices unseen since May of 1997. That's 11 years of 0% returns. Having endured that, you may well be scratching your head as to why you'd ever read an investment book. Who wants to buy stocks when the market is fragile and faltering? The answer might surprise you. Warren Buffett, the world's greatest investor. One of our top analysts at the Motley Fool, Anand Chokkavelu, discovered something fascinating about Buffett. He had around $45 billion sitting in cash at the end of 2004, and 2005, and 2006, and 2007. In fact, at one point, Buffett had 20% of the asset base of Berkshire Hathaway in money market funds. But when the market crumbled, he adapted. In the 4 weeks ended October 13, Buffett put $20 billion to work in the world of equities. You see, for long-term investors, now is precisely the time you should be reading an investment book and determining what to do with your savings. But the last thing you'll want to do is to invest without fully understanding the risks you're taking. The lesson from the Mark Twain quote that leads us into this chapter is simple. Do not speculate. The same is the mantra of Hetty Green, America's first female mogul investor. And so let's stay out of speculation mode by reviewing together exactly what happened with this market crash, and then we'll wend our way through the book assembling the ideal approach for building your everlasting, rock-solid stock portfolio.